Hey guys, what's up? I'm Erin and welcome back to the channel. So you've worked for decades, you've saved, you've planned, you've invested, and you've finally done it. You crossed that finish line into retirement. But what if I told you the first 12 months of your retirement could make or break your next 30 years? What are the biggest mistakes to avoid? Because there are traps that can quietly derail your finances, your health, and even your sense of fulfillment if you're not careful. But they are avoidable. Overspending in the honeymoon phase. The first year of retirement can feel like one big exhale, and for good reason. You have had decades of structure and stress and sacrifice, and now is your moment to enjoy it. But here's a catch. All of that freedom might trigger spending whiplash. You go from budgeting every single paycheck to looking at this big pot of money and suddenly get this sense of urgency. This urgency to take the trip that you've been putting off. The urgency to redo that kitchen you've always wanted. Before you know it, your withdrawals could outpace your plan. It's not about guilt, it's about awareness. Because overspending doesn't just mean less money later on, it means less compounding, it means less flexibility, it means maybe having to make some really difficult cuts later in life when you feel backed into a corner. And here's the thing, it often doesn't even feel like overspending. A lot of times it just feels like catching up. Catching up on fun, on freedom, and everything you didn't have time for while working. Here's my advice. Say yes within the context of your plan. Did you budget for a trip to Europe? Then go and have fun. Did you budget for a home renovation? Then go ahead and do it. But resist the urge to act on impulse, to do everything simply because you have the time to do so. You don't want to front load everything into your first couple of years in retirement. You want to have a retirement that can sustain you for decades to come. Selling in a downturn. This one's big and has less to do with the numbers and more to do with emotional discipline. Let's say you enter into your first year of retirement and the market takes a dive. And let's be honest, this very well could happen. That instinct to sell, that's pretty natural. You're not getting a paycheck anymore, and all of a sudden it feels like every single dollar in your portfolio is more precious than ever, and it really needs to last. And the headlines start screaming recession, you're seeing your balance drop. It's easy to panic. But here's the truth. Acting on that fear can be catastrophic because when you sell during a downturn, you're not just reacting, you're locking in losses. And if you're also withdrawing for income, you're compounding the damage in a way that's incredibly hard to recover from. This is sequence of returns risk and one of the most dangerous and least understood forces in retirement. It's not just the average return over time, but the order in which those returns happen, and poor performance early on can weaken your portfolio. That's why earlier we talked about having a cash reserve and a bucketing strategy. Those aren't just financial tools, they're emotional buffers. When you have 1 to 2 years of cash set aside, you don't need to touch your investments in a down year. You give the market and yourself time to rebound. So when the headlines get loud and the stock market graphs get red and your gut screams, get out, just pause and go back to your plan because the data shows us that over time, the market does recover. The best decisions are not made from a place of fear. They're made from a place of confidence, and be confident in the plan you've built. Investing too conservatively. When people tend to think about risk in retirement, they tend to think about the stock market, volatility, big drops, things like that. So often we see so many people move to ultra-conservative investments like bonds, high-yield savings accounts, money market funds, things like that. In the short term, that can absolutely feel safer. But here's the problem. If you go too conservative too early on, yes, you protect yourself from market volatility, but you also erode your purchasing power. Let me explain. Retirement can easily last 20 or 30 years. And with that kind of timeline, inflation is just as real as a concern as market performance. In fact, even at just a 3% inflation, your purchasing power cuts in half over 24 years. So if your money is essentially sitting in cash, yes, its value will be stable, but over time, its purchasing power will be going down and down and down and down. That's why in retirement, well, especially in retirement, you need exposure to growth. You have to have a way to maintain your purchasing power over the course of your entire retirement. Maybe it helps to think of it like this. Bonds and cash, that can be your short and your medium-term security. But stocks, that's like oxygen. Without it, your plan will suffocate. So yes, you can certainly get a little bit more conservative with your plan as you go to and enter into retirement. But it's not just about protecting your assets, it's also about preserving your purchasing power, so you still need exposure to equities. Let's talk about one of the most common and costly decisions retirees make: claiming Social Security too early. Now I get it. You finally turned 62, you're finally eligible for Social Security, and the idea of getting that check every single month, that's pretty alluring. It feels like something you've earned, something you've paid into for decades. But for many retirees, claiming early comes with a steep cost. If you start benefits at 62, you'll receive about 70% of your full retirement benefits. That's a 30% permanent reduction for life. And if your spouse will one day rely on your benefit, that smaller benefit will follow them too. But here's something that's really powerful. For every year you delay past your full retirement age, your benefit grows by 8% per year, all the way up to the age of 70. That is a guaranteed return. It's inflation adjusted every single year, and you get it regardless of how the market performs. This should really be an upside when we're looking at retirement income streams. But the impact goes even deeper than just a bigger monthly check. Delaying Social Security gives you more control over taxes, Medicare premiums, and portfolio withdrawals. It can open up space in those early years of retirement for you to do Roth conversions and keep yourself still in a lower tax bracket. This can be a really tax-efficient strategy for your entire life. Now, there are absolutely times when claiming early makes sense. Maybe it makes sense within your financial plan. Maybe you have health concerns. Maybe you truly need an income stream. But just make sure that you're making this decision based on your financial plan and not simply out of fear. So at the end of the day, step back, run the numbers on your situation, because if you get a guaranteed higher income stream for life, that may provide you a valuable income in the later years of your life when you need it most. Making big lifestyle changes too fast. One of the biggest temptations in that first year of retirement can be to make big sweeping changes. Maybe that's selling your house, moving across the country, buying an RV, just starting fresh. And maybe one of those big decisions is exactly the right move for you, but it might not be the best thing to do in the first year of retirement, because often in that first year of retirement, you're still adjusting emotionally, financially, and rationally. You're navigating a major identity shift, building new routines, getting used to unstructured time, and maybe even figuring out a new rhythm with your spouse or partner. And it isn't just a life stage, it's a full-blown life transition, and transition takes clarity and time. The dream of moving to a warmer climate might not be as alluring once the novelty wears off. Maybe you downsize to a condo, but then you realize you're further from your grandkids. Maybe you love traveling and the RV life is nice until you realize you don't like sleeping in a parking lot. You don't want to make a permanent decision based on a temporary emotion just to prove to yourself that you're retired. So if you're dreaming of a life that's drastically different than the one you're living, instead of going all in, maybe you simply test drive it a bit. If you want an RV lifestyle rather than going all in and buying one outright, maybe you rent one for a bit. If you're thinking of moving to a new location, maybe you rent in that location rather than buying a new home outright and hold on to your older home in the time being. I can give you a personal story. I recently toured a home that had been sitting on the market for quite some time, and I liked it a lot, but I'm the type of person who has to sit with a decision for some time. After a while, they decided to run another open house. I went to the open house and I decided, yep, this is the home I want to make an offer on. Well, that open house led to multiple offers, and I was inevitably outbid, so I didn't get the house. A few days later, I was talking with a friend about this decision, and he said, "Aren't you kicking yourself right now? If only you would have offered 5 days sooner, you probably would have had it." And he's probably right, but when he asked if I regretted it or if I was kicking myself, my immediate answer was no, because 5 days earlier, I wasn't emotionally ready to make that decision, and that matters too. There will always be other homes. I like to make decisions when I feel ready, when I feel confident, when there doesn't feel this sense of urgency. And I think retirement decisions are the exact same way because they're big decisions. You don't have anything to prove to anyone. You act when you have clarity and when it feels right to you. You don't have to react. You don't have to make big moves quickly. You can make big moves. Just make sure you're confident that they're the one that fits for your life. Skipping estate or long-term care planning. Let's talk about something that's often overlooked in that first year of retirement simply because it doesn't feel urgent. Estate planning or long-term care planning. Now, I get it. You just retired. You want to focus on all the joys of retirement. You don't want me to be the buzzkill coming along to say, let's think about the worst case scenarios. Well, that's what I'm going to do because this is really when these conversations should happen. Because if you wait to have these conversations until something goes wrong, this is when your options narrow and things go downhill really fast. According to the U.S. Department of Health and Human Services, it's likely that many people over the age of 65 may need some form of long-term care. It could mean in-home help, assisted living, or a full nursing facility. And it's expensive. Recent data shows that a private room in a nursing home now averages over $9,500 per month, and that number just keeps climbing. Even part-time in-home help, that can still be thousands of dollars a month. So you need to figure out what your plan might look like if you ever end up in this situation. Would you be able to self-fund it? Do you have family members that would help? What does that plan look like for you? There's no right or wrong answers, but you want to have clarity and you want to have a path should you need it. These aren't fun questions, but they are important ones to have. They're not only protecting you, but they're also protecting your family members from confusion and stress about doing the right thing if something should ever happen. And while we're thinking about the future, and I know we touched on it earlier, this is a great time to review your estate plan. That means your will, your healthcare directives, your power of attorney, and any updated beneficiary designations. Even if you think you set this up when you set up the account, it never hurts to double check it. Things may have shifted. Who you want these things to go to may have shifted. Your retirement is the next stage of life. Make sure everything is lined up the way you wanted it, because over time, things can tend to change. And all of this is done with the mindset of taking care of the people you love, making sure that you're organized and everything is set to transition the way you want to. And you do this from a way of protecting the members of your family. You get to make your wishes known when you're clear-headed and you're calm and you're in control. And that protects your loved ones from needing to scramble and guess what you would have otherwise wanted. Assuming your spouse or partner has the same vision as you. This one can sneak up on even the strongest couples and is a really common source of tension for new retirees. Just assuming that your partner has the same idea of what retirement will look like. For years, your life revolved around managing schedules, managing the household, raising kids, planning time together on the weekends. But then retirement happens and there's this shift. Suddenly, you have time together and a lot of it. Now, how you might want to spend that time may not be as aligned as you think. Maybe you picture lazy mornings, occasional travel, and time with grandkids. Maybe your partner is thinking of starting a side hustle and picking up new hobbies. It's not that any vision of retirement is wrong, it's just that you and your partner need to be aligned. And it's really important to have these conversations because if you don't, rather than living a shared life, you start living parallel lives where eventually you even drift apart and maybe there is resentment. So don't let things go downhill. Make sure to always talk with your partner. In your first year of retirement and hopefully before, make space to talk about your visions, not just the logistics, but the real stuff. Ask questions like, what does a great day in retirement look like for you? How much alone time do you need? What scares you most about this stage of life? What excites you the most? Never assume, ask. And you and your partner don't have to be aligned perfectly. You have to find ways to come together, but you can each have a slightly separate version that you can pursue. Make sure you understand each other's point of view and make space for each other's reality. Retirement isn't just a financial plan, it's also a relationship plan, and the best relationships are the ones that figure it out together. Let's talk about something that doesn't show up on a spreadsheet, but impacts everything in your first year of retirement. Your identity, your relationships, and your sense of purpose. Because no matter how financially prepared you are, there's a shift that happens the moment work ends. And for a lot of people, it's more disorienting than they imagined. Identity shift and loss of purpose. For decades, you had a title, a schedule, a reason to get out of bed. Your work shaped your routines, your confidence, even how people introduced you. And when that disappears, even by choice, it can leave you with this quiet emptiness. Now, that doesn't mean you're unhappy, but it can mean that there's a period of adjustment, and adjustment takes time. Why it's so important to retire to something. I said this earlier in the video, and I'm going to say it again because it's just as important now. You have to have something that you're retiring to, not just something that you're retiring from. If all of your energy went into getting away from the stress of work, that's valid. But now, what do you want your life to look like? What are you putting your energy towards? What fills your calendar? What fills your heart? What reminds you that life still matters in a way that has nothing to do with a paycheck? The happiest retirees are not the wealthiest ones. They're the ones that have a direction and a purpose with their life. Maybe they're the ones that are doing mentoring, spending time with their grandkids. Maybe they've even taken up part-time work because it brings them joy. You have to know what works for you. Marriage and social dynamics. While you're navigating a new transition, odds are your partner is too. Maybe they're retired, maybe not, but the odds are there that this dynamic is shifting. You might be spending more time together, and sometimes that's absolutely beautiful, and sometimes that's a little bumpy as you figure out a new rhythm. This also might be a season where friendships fade and new friendships form. All those people you used to see at the office anymore, well, it's likely you're not going to see them that often anymore, and that could really be losing a big friendship group for a lot of people. So it's really an important time to build up your social networks because it's going to carry you through retirement. Have you ever considered writing a retirement vision statement? Not just for your finances, but for your life. Some of the questions you might ask yourself might be these. What kind of person do I want to be in this chapter? What kind of energy do I want to bring into my days? What would make me feel proud 5 years from now? Write it down, revisit it, and talk about it with your partner. Make sure that you're being intentional with your time and your days and your life, because the last thing you want is 5 years to go by and look back and be like, I don't even know how that went past. Because the emotional side of retirement isn't a side note, it is the work. And when you give it the space it deserves, everything else, your finances, your health, your relationships, falls into place a little bit more naturally. So if you're in your first year of retirement or you're approaching it, take a deep breath. There's no test, there's no grade, there's no perfect formula. What it is an opportunity. The first year is there for you to lay your groundwork on your finances, your health, your relationships, everything. It's when you start building the systems, the boundaries, and the rhythms that will shape how the next 10, 20, or even 30 years unfold. You don't have to figure it out at once. You just have to be intentional and be curious. But that first year, while it's not about figuring everything out perfectly, it is about laying the foundation, the habits, and the systems for the next 30 years. What are your thoughts? Are you in your first year of retirement? Are you leading up to that first year? Have you done the things on this list? Let me know in the comments down below. I post new videos every single week. If you got anything at all out of this one, please give it a like. If you're new here, please consider subscribing. Or if you know of someone who might get something out of this type of content, please consider sharing. I'll see you soon. Bye.